My name is Stan Orzula. Some of you may have heard me speak before. I'm a partner here at Ferrazzano, and I'm going to talk about banking cryptocurrency today. There are three topics that I want to focus on in today's presentation, and that is what is cryptocurrency, regulatory issues, and finally, banking cryptocurrency. And as a preliminary matter, I believe I gave a presentation about cryptocurrency at spring cleaning 3 or 4 years ago. And as I started to prepare for this year's presentation, I looked at my presentation from 2017, and I can tell you it's completely different. And if we do a cryptocurrency presentation, whether it's next year or 3 or 4 years in the future, it will probably be completely different as well, which just shows how quickly things have changed. And at first in the past, cryptocurrency was definitely novel, innovative, but quite frankly, sort of on the fringe. But especially in the last 2 or 3 years, and also with the recent pandemic, cryptocurrency has become more into the mainstream, and it's being addressed by the regulators and other banks looking how to bank it. And quite frankly, banks are the perfect vehicle to act as a custodian and to facilitate cryptocurrency as the technology and the regulatory framework develops. Next slide. So what is cryptocurrency? Next slide. Cryptocurrency, it's a non-government backed form of electronic money that utilizes blockchain technology. We're going to talk about blockchain in a second. Now, when you hear the term virtual assets, digital assets, cryptocurrency, there's some little distinctions between them. Generally, cryptocurrency does not include fiat digital currency, or what's called quote unquote stablecoin, which is a digital currency backed by a reserve. Some examples of a fiat digital currency, one's being developed by the People's Republic of China right now, and other countries as well. Also, it is not a cryptocurrency if it doesn't utilize blockchain technology. Then it could be a virtual asset or a digital asset. And finally, I wanted to talk about non-fungible tokens, because those have been in the news recently. Non-fungible tokens, for example, are digital art that is constructed in a way that is unique, with a unique digital signature, so you can't reproduce it or trade it. Compare this to cryptocurrency, which is actually fungible because it can be traded, and that's what makes cryptocurrency popular. But you're going to see more and more about non-fungible tokens, but again, it's not cryptocurrency. Next slide. What is blockchain? It's a distributed ledger or peer-to-peer database spread across a network that basically records all transactions in data packages called blocks, which can be secured. Next slide. Now, for someone like me who's not very technologically advanced, that's hard to understand. So this next slide sort of illustrates it, that there's an electronic hash that's created, and each hash has to match up. And that's what makes blockchain technologies very popular, is because through this hash system, they're considered very secure for the time being. Next slide. Another name for blockchain is distributed ledger technology. And basically, it is a shared decentralized database across independent networks. But again, this is part of cryptocurrency, but not unique to it. It can be shared with other applications, like, for example, non-fungible tokens, which I just mentioned. And also, it's increasingly being used for electronic contracts and chattel paper as well. So there's a lot of different applications, but the base of a cryptocurrency is the distributed ledger technology. Next slide. How is it created? Basically, almost all cryptocurrencies are created from an open source code that's derivative of Bitcoin or Litecoin, which are two cryptocurrencies. And then anything that comes off that are called quote unquote forks. How is it actually created? Well, it's created through an electronic mining process where I like the one analogy that I've seen. The easiest way to explain it is it's a race to correct the correct number of jelly beans in a jar through trying to figure out an algorithm, but you have unlimited guesses, and basically you keep guessing and guessing. Well, that sounds like an easy and quick way to make money. However, it requires a lot of computing power and electricity. So some of the more successful Bitcoin mining operations out there are operations overseas that have access to cheap hydropower or other sources of electricity that are very cheap, because it requires a lot of computing power and electricity to actually mine a cryptocurrency. Next slide. So why is it popular? It's transparent, decentralized, high quality data based on the blockchain process. Also a lot of process integrity based on the blockchain process, and it's anonymous too. And more importantly, it is becoming more and more popular. People hear stories about Bitcoin millionaires and billionaires, and you hear about it in the news every day. In fact, in the Wall Street Journal earlier this week, there was a famous wine shop that's now accepting cryptocurrency as payment. You hear of real estate transactions where they are accepting cryptocurrency payments. So as it becomes more popular in consumer and commercial transactions, it's sort of being addressed by the regulators and also within the banking system. Next slide. So while it's popular, there are still some issues. It's an intangible. A Bitcoin is not backed by anything. It's volatile. Fortunes are made and lost in people trading on Bitcoin, and there's an easy access. You can go on PayPal or Coinbase, which just had an IPO, which is a platform, or Robinhood or other apps, and anybody can start buying Bitcoin. It's an unproven technology. It's been around for a few years, but there might be another technology that renders the protections of cryptocurrency null and void. There's regulatory uncertainty. This is an area where the regulations are catching up to the technology. Accounting issues, hackers. I am confident that there's hackers out there trying to figure out how to hack cryptocurrency and to steal it from other people. And finally, it's not backed by anything. So it's something that just exists out there. But it is being used as a value storage channel. So here are some examples of cryptocurrency that you probably heard in the news. Dogecoin, Bitcoin's probably the most famous. Ethereum and Litecoin are two of the early ones, more popular. So you'll see that there's a Bitcoin and Bitcoin Cash. And what is the difference between the two? So Bitcoin Cash is a schism or a faction of Bitcoin where the miners developed it, and at some point there was a hard fork created where Bitcoin became its own currency. So a weird way an analogy to think of it is that the United States was once part of Great Britain, but now we're our own independent, separate country. So you have that with other cryptocurrencies where you have a popular one and other ones are branched off. Now, this list here is just a small list. There are many more that are out there. There's many more that are being developed, but these are some of the more popular ones that you will hear about. Next slide. Cryptocurrency regulatory issues. For today, we are really going to focus on regulatory treatment and BSA issues. There's also cybersecurity issues with it, IT licensing and intellectual property issues, and third-party agreements. A lot of those areas are treated in your typical, under the aura of typical vendor management treatment. For example, some banks are looking to use third-party platforms such as NYDIG to offer cryptocurrency custodial services for their customers. But to use those, and they're also looking into using Bitcoin or other cryptocurrency ATMs. But to view those, yes, you have the added element of cryptocurrency, but it's under the aurora and aegis of vendor management theory, which we've talked about a lot. So I really want to, but it's important to keep that in mind if you're evaluating a cryptocurrency product or service, that they're under that aegis. But we really want to focus on the actual cryptocurrency issues here. Next slide. How the regulators view it. As I mentioned before, the law and regulations are catching up to technological developments. Different regulators do it differently. Some haven't said that much on it. Others have, such as the OCC and certain states. And also just to let you know too, in the House, there's a bill 6154, the Cryptocurrency Act of 2020, which is an idea of trying to unify the federal regulatory scheme. Next slide. How does the SEC view it? The SEC has been very active in this area. They've been coordinating with other agencies. They've issued, for example, some no action letters on Vcoin, that's a cryptocurrency, where they've issued a no action letter on the platform saying that it doesn't have to be registered as a security. The SEC has a bunch of enforcement actions out there. Their focus is on ICO, and ICO is an initial crypto offering. That's a chance to, much like a stock IPO, to buy into a cryptocurrency before it becomes widely available to the public. I also mentioned Ripple Labs. Ripple Labs is, they've had some unregistered cryptocurrency offerings that have been subject to a bunch in SEC enforcement actions over the year. So I would probably say the SEC is probably in the mainstream of offering this. And it's probably, I think, even though it's a currency, the SEC probably has the right view to treat it as more of a security because it's not an actual fiat currency. Next slide. Same with the CFTC, the Commodities Futures Trading Commission. They've also view it as a commodity, and versus the banking regulators, they have a principle-based regulation on it, and they've issued a bunch of publications and guidance. The most interesting one is the one from 2020 on retail commodity transactions involving certain digital assets, and they're talking about the various means that of delivering virtual currency. Next slide. And of course, the IRS is going to take a viewpoint on cryptocurrency. And how do they view it? Well, the answer is in the title below. They treat it as property, which means it's taxable. And we talked about earlier about the fork between Bitcoin and Bitcoin Cash. Well, just a month ago, the IRS issued a memorandum saying that any Bitcoin that was Bitcoin Cash, rather, that was created as of that fork is considered gross income. So as people flock to cryptocurrency as a way to store value and that something's out there, of course the IRS is catching up and figuring out that it's something that can be taxed and is trying to fit it into its current taxable scheme. Next slide. The OCC has done a lot with cryptocurrency. As you know, the OCC has its special purpose national bank charter, but they can also issue national trust bank charters. And both of those are being viewed as a way to regulate cryptocurrency. Paxos National Trust was probably going to be one of the first one as a national trust, which doesn't take insured deposits. And Paxos National Trust is from the ItBit PayPal platform, and it's a way to offer custody and offer to cryptocurrency. There's been two OCC interpretive letters, 1170 and 1140, both within in the past year, and where they talk about 1170 is probably the more important one, talking about banks providing custody services, national banks, for cryptocurrency, that it's a permissible banking activity. Now, not a lot of the other guidelines have been fleshed out on it, but it sets the stage that for national banks that want to get into this area, they can. And then 1174, This really doesn't apply to cryptocurrency because it deals with stable coins, but I think it's important nonetheless to show the increasing acceptance of cryptocurrency by the regulators. The FDIC hasn't issued much guidelines on it, but they are evolving and working on it. And just today, the FDIC Office of Innovation issued a process where they're going to have office hours to discuss any innovation questions, and certainly cryptocurrency falls into that. So I expect that will be addressed today, and that's something that just came out this morning. Next slide. FinCEN has an interest, of course, in cryptocurrency because of Bank Secrecy Act AML issues. And in December, FinCEN had a notice of proposed rulemaking that relates to filling in the current gaps in the AML laws and regulations to account for cryptocurrency. Because one of the popularities of cryptocurrency is that it can be anonymous, but then that can lead to the parade of horribles that John mentioned earlier in his presentation. Next slide. And of course, the CFPB has commented on cryptocurrency. They did so back in August of 2014, almost 7 years ago, which is a lifetime ago. But as consumers increasingly use cryptocurrency, we definitely expect to see more from the CFPB on this issue. As you've seen recently with the new administration, how with the CFPB is being more active in expanding its roles. So that's another regulatory agency to keep your eye out on. Next slide. Coming here to Illinois, I'm going to talk about Illinois first, and I know we have Chase talking later, so I just going to cover this briefly, and then we're going to talk about some other states. Illinois, I think, has been in the forefront with cryptocurrency, and one of the reasons is that Chicago being traditionally a home of the trading and commodities communities, cryptocurrency is a natural extension of that. And we're fortunate in Chicago to have a great base of fintech and cryptocurrency development going on. So I think Illinois is a natural place where the regulators have been addressing this. And some of the things are, they talked about treating digital currency like from 4 years ago. Illinois, we had the first cryptocurrency ATMs, and not myself, but our partner John Geringer helped the first one, I think, get across the finish line. So you can buy cryptocurrency at an ATM. We're working with some banks in Illinois that also have that program, and we've also worked with some individual private clients that wanted to buy crypto ATMs. Illinois also had a blockchain initiative for the last couple of years as well. And then finally, in the General Assembly, you have House Bill 3968, where Illinois wants to create a special purpose trust company, much like similar to the one in Wyoming that I'm going to discuss next, that can hold cryptocurrency. But more importantly for banks is that they want to give Illinois state chartered banks the same powers in this legislation. And then finally, part of that is that they want to allow borrowers to pledge cryptocurrency as collateral, which I think is really fascinating and can be, very good. So while that legislation is pending, we've been privileged to have discussions with the IDFPR about how they're going to address it and develop those guidelines as well. So I think it's going to be an exciting development that cryptocurrency, at least in Illinois, is something that banks can potentially have more direct guidance and be able to hold in the next year. Next slide. Other states, Arizona, Arizona has a regulatory sandbox, but we haven't seen much on crypto out of it. Louisiana actually passed a virtual currency business act, but they haven't implemented any regulations or guidelines. And the purpose of that act is to allow crypto or virtual currency in commercial transaction. Wyoming's interesting. They've sort of taken the forefront with their special purpose depository institution crypto bank charter. There's two out there, Kraken and Avanti, and they generally require $5 million in capital, 3 years worth of reserves of operating expenses, and then other reserves depending on what they hold. Most importantly, they are not FDIC insured, but it's more like it's a special purpose charter, but more as a setup as a trust company. And then finally, in New York, you have the New York Department of Financial Service BIT license as well. They've been ahead in this area as well. So it's interesting to see how the different states are trying to catch up in this area. Next slide. So probably the biggest issue, I think, with cryptocurrency is bank secrecy issues. Because cryptocurrency is anonymous and can be hidden, the regulatory framework is definitely catching up to regulate it more. And then I think you also, the other issue too is that you run into is that, is a crypto platform a money service business? And you combine that with state-by-state money transmitter laws, and you have a lot of areas that are working out. And I think the goal of the bank secrecy issues is to bring cryptocurrency into the light. And granted, it may lose some of its appeal to some people when it's not as anonymous, but to the extent that it's being used and facilitated as a way to facilitate payments, I think it's very important that BSA is addressed, and I think that'll help get it more into the mainstream. Next slide. So why should your bank cryptocurrency? Well, as I talked about earlier, a recent article actually just from last week, 15% of US consumers have cryptocurrency. More importantly, 60% of those would want to use their own bank to invest in cryptocurrencies. And also, the last statistic is interesting that if there's a credit card program, rather than getting frequent flyer miles or other rewards, people would want cryptocurrency. So there is a demand and interest out there in the marketplace for it. And I think banks are in a good place to offer it. Next slide. So what can banks do now? Well, banks are starting to offer custody services and ATM services. In the future, I think crypto will be more used as a correspondent banking and settlement. I think you're going to see the rise as cryptocurrency as collateral, especially as Illinois developments. And then the last issue, will there be some type of insurance for cryptocurrency? I think that's sort of a far out issue. I still think that you may see that if it's a fiat backed cryptocurrency. I'm not sure for a private cryptocurrency, but hey, if we look at our nation's history of banking, we've had private deposit insurance, I think, back in Kansas and other places in the early 20th century. So you may even see the rise of private deposit insurance for cryptocurrency. So the big takeaway from it is the big takeaway is that banks should be cautious with cryptocurrency. And actually, we have some questions, and I'm going to try to answer, reserve a little time at the end. So some of the potential bank offerings are ATMs, custody services, collateral, and also to facilitate payments in this area. Next slide. I want to talk about cryptocurrency ATMs briefly. As I mentioned before, our firm helped start the first Bitcoin ATM back in 2014. Before my time here, I give again accolades to John Geringer and the state of Illinois for working on that to get through. They're definitely becoming more prevalent. There's a lot of BSA and AML issues. And earlier in my discussion, I talked about third-party vendor agreements. Well, we'll use a great example. We had a private investors group that wanted to obtain, for lack of a better word, a franchise in cryptocurrency ATMs. These were going to be out of state. And when we advised them, this out-of-state franchisor of ATMs, their agreements weren't great. Now, we were advising a private group, not a bank, but I wouldn't have recommended it to the bank. And we didn't recommend it to these investors just because the franchisor offering these ATMs, quite frankly, was light years behind where they should be in the regulatory stream. But crypto ATMs are becoming more popular. whether they're physical ATMs or more virtual, and as more people are offering them. And probably the biggest issue is the BSA AML issues, to make sure who's buying them, are there limits on it, et cetera, and your typical BSA AML issues. Next slide. Custodial and vault services. I think this is sort of an easier way to entry for banking into cryptocurrency, because banks already offer custodial services for securities and other intangible types of things. If your bank decides to go into it, there are a couple of big issues. There's some OCC guidance on it. There are cybersecurity issues, I think, is the big one, because it's a virtual vault, so you can't let anybody in it. The other way too for banks to offer is that there's a couple of platforms out there, NYDIG and Anchorage, that are offering this, and we're starting to have clients come to us asking us to look at these and to figure out if it's appropriate for their bank to sign up to one of these services. But I think of all the cryptocurrency offerings by bank, I think this will probably, and ATMs aren't going now, but this will be an immediate one for a bank that can be able to partner in. And when a bank does, you have to look at your vendor management principles and other things. And this is something that, if you're looking to do it, we can help you with. Next slide. Collateral. As I mentioned with the Illinois bill pending about cryptocurrency, we think cryptocurrency is going to be a form of collateral. But the question is, how do you value it? We had a presentation a couple of weeks ago where we had someone who's doing that in Illinois, where his services are to create greater acceptance by having sort of a ratings agency, for lack of a better word, for cryptocurrency, to make people feel more comfortable that it's actually worth what it's worth. And then the other issue is, how do you secure it and perfect an interest in it? And how do you value it? How does it, fit in? Because it's not like a piece of land or cash in a bank account that can be valued, or another publicly traded security. So there's a lot more factors to determine, what's its value as a collateral. Next slide. One other area in crypto that's being developed is the payments issue. For example, Bitcoin Cash was forked from Bitcoin because of the technology involved. You can make payments faster with it. And cryptocurrency could be a potential replacement for ACH. It's fast. It could be faster. Some banks are using stable coins, again, which aren't cryptocurrency, but they're using it for faster payment facilitation. But again, you have OFAC and BSA issues combined there. So that's one other application of cryptocurrency we expect to see developed in the couple of years. So finally, some of the takeaways are, it is a new frontier, but I think they're here to stay for now. And while the current regulatory scheme and law and compliance structure is a patchwork, I think it's going to be developed and more unified going forward. You can't be too cautious with Hi, this is Stan. When somebody had a question about offering services to a crypto mixer, a crypto offering services to somebody in a crypto business, your bank has to do your due diligence and follow your own BSA. But also, I think more importantly, you have to educate yourself on their business and do extra due diligence, especially if it's if it's the first one, and to make sure that there's appropriate controls that are in there. And I don't think it hurts to have a conversation with your regulators on it to see if they're bankable, because usually you're going to be setting them up for a normal bank account. But it's like anything else, whether it's a fintech or anything that's new in the money service, in the MSB or money transmitter business, is to look over through that lens. So my time is up. But I think I have another minute for any other questions. And thank you for listening. And if you have any other questions offline, please don't hesitate to reach out to me.
Great. Thank you so much, Stan. And yes, even within the crypto world, there are various levels of risk, and these crypto mixers, which try to anonymize some of these functions, have been under the careful eye of law enforcement. There's been some indictments. So within the higher risk of crypto, you're going to have an even higher risk of these crypto mixers. So stay tuned on that. And let's see, any suggested books or treatises on the subject? I think we'll leave to our new colleague, Justin. Maybe what we'll do after the event, we'll send out some suggested readings for everybody.
And I just want to add too, I said reach out to me, but reach out to Justin, myself, or John, or anybody else on this team if you have any questions about cryptocurrency.